Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about trading routines, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to find Coach Ernie's school community. Enjoy guys.
The process really is to develop your routines. If you want to get into this very quickly, the easiest way to do it is to start following along with my morning market analysis. That's our sort of the fundamental thing that you have to do to figure out what trade that we're going to put on every morning, where we can figure out our attitude according to the volatility in the market. That will tell us how wide and how much we can expose ourselves to the opportunity, the direction that we're going to go with. Typically, we just look at a very simple indicator, whether we're moving up or down. And if we don't know, then we flip a coin. And then the other is market structure. And we analyze the market usually ahead of time and look at where the structural levels are in the market, right? So we do these three things, and then that sets us up for a trade in the morning, which we take in the morning session between 9:30 and 12:30. We're waiting for a move that will interact with one of those structural levels. Where we're talking about here, structural levels would be the edges of these profiles or these deep volume wells. So volume profile is really a study of this volume profile and the levels that we can identify directly from it. And it's on the tops and bottoms of these nodes and these deep cracks. All of those represent support and resistance levels. The dark areas, or the absence of volume, represents low liquidity, and inside of nodes represents high liquidity. And so that implies that there's going to be certain behavior. In other words, there tends to be trending moves or impulsive moves in low liquidity, or the black areas, or the volume wells, and there tends to be consolidative moves in the heavier liquidity dense areas of the nodes. So you put all that together and you can very neatly paint a picture of potential scenarios where price will move. And so we're waiting for pullbacks in an uptrend and pull downs into a downtrend to interact with one of these levels. And then that's when we take the trade. Once we're in a trade, we're putting an out of the money butterfly with asymmetric risk to reward. We're trying to capture the move that will, once it's interacted with the market structure, to go towards our fly. And then we start instituting our profit management. And that's really the thing that you're practicing most often. If it goes against us, we don't manage it. We make sure that the risk that we take is small enough that we don't have to manage it. In fact, the size of the risk that we take is the management of our strategies. So that's it, right? That's like part of the day. And then the end of the day is once you've finished whatever you've done, make sure you've logged, you've journaled, you've done the appropriate capturing of what you did, why you did it, so that you can use that in a bigger process where you can review that on a periodic basis and make sure that you're staying true to the strategy and your behavior. And that's the routine. Over and over and over and over. Every day is just a data point. You're measuring it. You're measuring your progress, your ability to stick with the strategy, the process, the methods. Your consistency will ultimately result in a positive equity curve, or at the very least, not go down.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's school community.